Miss, I thought you were talking about the previous questions. I'm not done with this one because I had a lot of tests, so I wasn't able to do this.
Okay.
Should I do it right now?
Let's discuss this together. Like we
Okay.
can simply discuss the paper.
Okay.
Just give me 2 minutes. You have this paper. No? You already have this paper.
I don't have the recent 125.
But I sent it to you already.
Oh
Give
yeah,
me
sorry.
these
I actually got a past paper book. In my past paper book, I don't have the 2025 past paper, the recent ones.
Okay. Okay, so as you can see, like in the question number 1, we have to prepare the updated cash book. And we also have to prepare the bank reconciliation statement. Okay, so as we know that how we can prepare the cash book, first of all, we have to see that what are the mistakes which we have done. Okay, so for example, they are saying that on 31st March 25, Zach's bank statement showed an overdrawn balance of 1665. So this is the balance by the bank statement. Remember that. And this is the credit balance for us, but the debit balance for the bank statement. But the bank column of his cash book showed a debit balance of this on the same date. So cash book is showing this amount, the bank statement is showing this amount, and this is the credit amount. Upon his investigation, he discovered that the following items appeared on his bank statement, but not in his cash book. So, as you can see, what we have to do in the A part, we need to prepare the updated cash book, and there are only bank columns we need to prepare. Okay, first of all, when we are going to prepare the bank, like a cash book, updated cash book, first of all, we have to write the opening balance. So on 31st March, the opening balance, the examiner is provided that is 825. So you will simply write it here.
Okay.
Since this is the opening balance and this is the debit balance, so that is why we will write it here. Here 825. Okay, after that, if you see they are saying payment received by a bank transfer from a credit customer. So this is what we have not recorded. The payment we have received from the credit customer, so they directly send that $310 into our bank account, and we don't know about it. So that is why what we will do, we will write it now on the debit side, like means this here. And then we have electricity charges paid by direct debit. It means that these electricity charges are automatically deducted from our bank account, and that is why we did not record it. So since this is the payment, so 936, we will write it here. Then we have bank charges on 25 March. So bank charges again is deducted from our bank account, but we did not deduct it. So that's why bank charges we will be writing on a credit side.
Okay.
So this is 58. Then they are saying that a standing order for insurance had been deducted in an error. As you can see that there's a standing order for insurance. It is deducted in an error. It means it's error by the bank. So we know that whatever the error done by the bank, we will not record it into the cash book, into the billed cash flow. That's why we will not record it. Then the interest received 45. So we will write 45 here, sorry, on the debit side. Okay, so after that, of course, you will balance this and you will be like calculating that what will be its balance brought down, and you will be writing that balance brought down here. You will write balance as per the updated cash book. So here you will write the balance which you will find from there. Okay, after that, we have to see these errors which is done by the bank. So there's a check payable to AC Motors had not been presented. It means that AC Motor is basically our creditor, and we have paid this $480 to him, but he did not present in the bank yet. But yes, of course, today or tomorrow, this $480 will be deducted. So that is why we will be deducting these unpresented checks. So whatever the answer you will get here, you just simply need to deduct this 480 from here, and you will deduct it and write the unpresented checks.
Okay.
After that, you can see the second one is they are saying check, cash, and checks deposited into the bank, which is 1210. So this was deposited, you deposited this into the bank, but the bank did not add it yet. So it means that this is basically our uncredited checks. So today or tomorrow, of course, this balance will be added into your account by the bank. So that is why we have to add this here. And if you see that the error was on 29th March, there was a standing order for the insurance which was deducted by the bank in error. So since it was deducted by the bank in error, so that is why this is what we have to add it back into the cash book balance so that we can get the right balance. So we will be writing bank error here.
So Miss, can you explain the bank error again?
Yeah, let me tell you again. Basically, we know what is the meaning of standing order. Standing order means that we allow the bank that you can cut the 1120 means 1121 from our bank account every month. This is what we allow. This is what we allow them. Okay, so it means that bank is deducting this 1121 every month. But this time we don't need to pay this, but bank deducted it by an error. It means this is a simple error by the bank. Maybe this is an error in their system or what we can say, and they deducted this amount from your bank account. So since they have deducted this amount from your bank account, so that is why we have to add it back.
Okay.
Understood or not?
Understood.
Okay.
So in the bank cash book, won't we like put that in the debit side again just to because we don't have it deducted?
No, this is not the error by us now. This is
Oh,
not the error by us. This is the error by the bank.
okay.
So 1121 we will write it here, and after that we will simply add this, and you will get the same amount as per the bank statement. Okay, so this is how you need to do this question. Now let's discuss the next one. They are saying that currently Zach completes a bank reconciliation statement twice every year, but is now considering completing on every 3 months. Like twice every year means that after 6 months he used to prepare the BRS, but now he is considering that he should complete this BRS after every 3 months, after every quarter. So we need to advise Zach that whether he should be completing a BRS every 3 months. So we need to justify. First of all, if we talk about the advantages. So in advantages, we can say that errors in the cash book we can identify sooner, like errors in the cash. Zach can identify sooner. That's one advantage. And in negative point, we can say that of course previously they were preparing BRS after every 6 months, but now they have to prepare it after every quarter. So it means that this will be time consuming.
Okay.
So this will be time consuming, and this will yeah, time consuming is a good point. Then again you need to write the positive point. So in positive point we can say that uh, we will be like having the accurate bank balance available more regularly. Zach will be able to know the corrected bank balance regularly. Then again, if we say negative point, so negative point, we can say that uh, like if first one of the time consuming. Secondly, we can say that Zach may hire the team to prepare the BRS,
Okay.
which increase cost for Zach, which increase cost for Zach in terms of salary. So at the end, you just need to say whether they should do that or not. So it's your choice. Whatever you want to write, you can write. Then they are saying state what is meant by the term dishonor check. So dishonor check means that a check is returned or like unpaid by bank. Okay, so next E part is that on 5 April, Zach was notified that a check paid into his bank account during March had been dishonored. The check was for $128 from Ali, our credit customer. So we need to make the double entries, like journal entry for that dishonored check. So when that check has been dishonored, so since Ali was your trade receivable, and we know that now Ali has to pay this $128, so it means that trade receivable again increases. That's why Ali will be debited. And since you previously debited the bank, but now you have to carry the bank account with the name of dishonored check. So that is why dishonored check will be carried and Ali will be debited.
Okay.
Next, we have question number two. Okay, so they are saying that Shaya is a trader. Her financial year end on 31st July. Totals of a trial balance at 31st July did not agree. Okay, name the account that Jaya needs to open to enable her trial balance to agree suspense account. Because we know that whenever the trial balance will not agree, so just to make it agree, we have to the suspense account. Then we have state the primary purpose of this account. So primary purpose is same that state the primary purpose of this account. Okay. So primary purpose is that we can like simply uh, we can use the suspense account. We can hold the suspense account until the errors are discovered.
Okay.
Then we have the errors, and now we have to rectify this. So first of all, the first error is no entry had been made for distribution cost for 320. So this is the error of omission. So if we did not record it, so now we will record it. So distribution cost is the part of our expense. So that is why we will be debiting the distribution cost with the $320. And since you have paid through the bank transfer, so the bank will be credited with the $320. So it is easy. Next one is that closing inventory had been recorded as 12,200, 12,200 instead of 12,900. So as you can see that we understated the closing inventory. It should be recorded as 12,900, but we recorded it as 12,200. Okay, now remember that closing entry we will never record in the trial balance. In the trial balance, we only record the opening inventory and purchases. So since opening inventory plus purchases will automatically, because you know that whatever the opening inventory we have at the start of the year, whatever the opening inventory we have at the start of the year, and the purchases we have purchased during the year. So when you will add this whatever left at the end of the year, this is the closing inventory. So we don't need to make another entry for that because opening inventory and purchase is already debited into the trial balance. So that's why we will not record it. Third one is that purchases return of 95 had been correctly. Have you understood the second error?
Yes.
Okay. Purchases returns of $95 had been correctly entered in the credit suppliers account, but had been debited to the sales return account. Okay, so what we have to do is you can see that the purchases, the purchases should be debited and the purchase return always carried. So purchase return of $95 had been correctly entered. There is nothing wrong with that in the credit suppliers account, but had been debited to the sales return account. So sales return account will always debit, always debit. So we mistakenly debit a sale return account. So what we will do now, we will carry this sale return account. So sale return account will be carried now because we need to decrease it. And since there is nothing on the suspense, so suspense account will be debit.
Okay.
Then basically we have to, once again, we have to do the entry with the purchase return as well. Because purchase return, what they are saying, the purchase return of 95 had been correctly entered in the credit supplies account, but had been debited to the sale return account. So we need to make this entry as well, the purchase return. Purchase return account 95 will also be carried. So it means that in the suspense account, we need to write the 190, 95, 95 plus 95, so 190. Then we have error 4. They're saying that a check for 225 received from ABC wholesalers. Okay, and ABC wholesaler is the credit customer had been correctly entered in the cash book. No, the entry had been made. Okay, so basically we should credit the ABC wholesaler. Okay, so since we received this check from them, 25, okay, and we have been made the entry in the cash book, but we did not meet the entry in the ABC wholesalers. So what we have to do now? ABC wholesaler is the customer, so it means that the customer should be credited because he has
Yeah,
paid the amount. No?
yeah, and suspense needs to be debited.
Suspense will be debit. Yes. So since there is nothing wrong on the debit side, we already debited the cash book. So that is why on the debit side there is nothing. But we have not credited the ABC wholesaler. That's why we need to credit the ABC wholesaler. So this is what we will credit. And since on the debit side it is correct, so that is why there is nothing. There will be suspense. So suspense account will be debited with the $225.
Okay.
Then we have the next error, that property maintenance cost of 1220. Okay, so property maintenance cost is this. Okay, so we know that this should be debited, had been incorrectly charged to the land and buildings account. So this is the expense and this is the asset. So what we did, we should write this into the like property maintenance account, but we charge it into the land and building. So what we will do, we should credit the land and building because we overstated that. So that's why land and building will be credited with the 1220. And since we did not debited the property maintenance cost account, so that's why we will debit this.
Okay.
So property maintenance will be debited and the building and land account will be credited.
Okay.
Then they are saying that name any two type of error that will not revealed by trial balance. Okay, so we can write anything. We can say omission and original entry. Then they are saying that you need to write that how all these 1, 2, 3, 4, 5 errors will be understating your profit, or it will be overstating your profit, or there is no effect. So first of all, the first error they have been done for us. Then rest of the errors we have to see. So let's see the second error again. So as you can see that in the second error, what is happening? Closing inventory, which was 12,900, but we recorded 12,200. So difference between these two is 700. Okay, so whenever you will be understated closing inventory, it means that your cost of sales, what will happen? Your cost of sales will be overstated. Then your cost of sale will be overstated because we have to deduct the closing inventory. So if we are deducting the lower amount, we should deduct the 12,900, but we deducted 12,200. So we deducted the lower amount. So that is why we deducted the lower amount from the cost of sale. That is why cost of sale has increased. When the cost of sale has increased, GP decreases and the profit also decreases. So basically, profit has been understated by the 700.
Okay.
Next error is this third one error. They are saying that now, okay, so what was this entry? The entry was, I guess, that the purchase return, return. Okay, one second, let me write it here. The entry was this. Suspense was debited by the 190, and the sales return and the purchase return 95, 95. It has been credited by 95, $95. Okay, so since As you can see that we did not record the sales return and the purchase return. So it means that what will happen? It means that your profit will be understated by this. How the profit will be understated?
Miss,
No.
can you repeat?
Yeah, I'm asking to you. I am asking to you to explain this third error, how this will affect the profit. They are saying that purchase return of 95. Okay, there was a purchase return account. You are one credit supplier. You return the material to your credit supplier. Okay, so what you need to do, you need to credit the purchase account and debit the credit supplier's account. They are saying that you correctly entered into the supplier account only, but you did not record in the purchase return account. You accidentally recorded it into the sale return account. So now remember that when we recorded this in the purchase return, when we recorded the purchase return, which is $95, okay, so, sorry, in the sale return account when we recorded that, so it means that if maybe you remember that first of all we need to write the sales, then minus sales return. So the sales return will be
Yes.
decreasing. It will be decreasing your net revenue. So
Yes.
it is decreasing your, yeah, it is decreasing your net revenue. So when it is decreasing your net revenue, so automatically your GP will decrease as well. When your GP will decrease as well, so it means that your
Then
profit
the
will
profit
decrease
will
as well.
decrease.
And plus, since you have not recorded that purchase return, you have not recorded that purchase return. So what does it mean? It means that you have increased your cost of sales, because we know that from the cost of sales, this purchase return, this purchase return should be deducted. So when you did not deduct it, so you increased your cost of sales as well. So when you increase your cost of sales, so your GP decrease further and profit decrease further as well. So it means that there is a double your profit will be decreasing with a double amount, with this 95 and with this 95 as well.
Okay.
So it means that 190, with the 190 your profit will be understated.
Okay.
Then, yeah, this is what you need to explain now. Fourth and fifth both.
A check for 225 received from ABC wholesaler accurate customer have been correctly entered in the cash book, but no entry had been made. But no other entry had been made. Two receivables are
Yeah.
debited and cash and suspense is credited.
Now I am saying that how
No,
this
wait,
will
get it.
affect
Yeah.
the profit
Okay. This is after the correction or before the correction? Profit after the correction or before
before
the.
the correction. Before the correction.
Okay.
1 second. I think if each left okay uncorrected before correction.
Okay.
So basically, this will not affect the profit. Why? Because
Yeah.
ABC wholesaler, he is the customer. He is a part of trade receivable, and cash book is a part of current asset as bank balance or cash. So that's why there is no effect.
Wait, can you explain why it's no effect again?
Because as you can see, whatever happening there, it is happening with your trade receivable and cash book. Cash book and trade receivable both are not the part of income statement. They are asking us to write the effect on the profit only, and these two things are the part of the statement of financial position, not the income statement.
Okay.
because the check we have received from the ABC wholesaler and he was the correct customer, so we have entered this correctly in the cash book, but no other entry we have made. So of course we have to debit the ABC wholesaler and we need to credit the suspense account. But the thing is that here this is about the trade receivables and the bank, and these two things are not relevant to the profit or loss statement.
Okay.
Next one is property maintenance cost of 1220 had been incorrectly charged to land and building. So then what will happen?
Unending cost of matter. Incorrectly charged. This is also part of financial statement.
No, they
Oh,
are
okay.
saying
Property
that
maintenance
property,
is okay expense.
yeah. So basically the expense we have made asset, na? So it means that we understated the expense.
Yeah,
When we understated
that
the
made our
expense,
profit overstated.
yeah, so profit is overstated by 1220.
Yeah.
Now this is the question number three. It is too easy. Let me just give you the very, you can say that summary of this question. Here, basically, what we need to do, we need to find out the 4 years depreciation. It is with the help of reducing balance method, and it is already solved here. You can, I'll send this document to you after the class, the
Okay.
solved part. And after that, there's a theoretical question, and then we need to find out the loss or gain on disposal. So there was loss on disposal we found here, and then we need to prepare the asset account. That's too easy. Only two entries we need to include, and then after that we have to prepare a disposal account, and we know that there are total four entries in the disposal account whenever we are selling the non-current asset. So asset account will credit, disposal will be debited, disposal does not have any nature. And similarly, when we are going to sell the non-current asset, so we have to decrease provision as well. So when we will decrease provision for deficit accounts, it will debit and disposal will be credited. And when we receive amounts of cash will be debited, disposal will be credited. And since there was a loss on disposal, so that is why we know that every loss on disposal will be a part of expense. So income statement will be debited in that case, and the disposal account will be credited. And at the end, both sides are equal. So it means that there is nothing wrong with the disposal account.
Okay.
And this is again like the theoretical question. Then we have question number four. They are saying that AY Limited has provided the following performance data for the last 2 years of trading ratio. And and they are saying that ratios are provided already. Ratios are provided already, as you can see for the year one and the year two. And what we need to do with it. Okay, so they are saying that complete the following table by indicating whether the ratio has improved or deteriorated at the end of the year two and give reasons which may have caused the change. And they are saying that one ratio we have already solved. So first of all, let's see return on capital employed. So as you can see, the return on capital employed was 10.67% in 2024, and now this is 10.05%. It means that your return on capital employed has decreased. So they have they written here that it is statutory audited, and what is the reason for that? Maybe there's an introduction of the additional capital or loans, or the profit for the year has decreased, because we know what is the formula for that operating profit divided by capital employed multiplied by 100. So when the answer will decrease, for example, maybe you have introduced additional capital or loans. Why? Because we know that capital employed is equal to owner's capital plus non-current liability. So if you will invest more money or if you will take more non-current liability, so this denominator will big. It means that your operating profit has to divide on the higher capital employed. Automatically your answer will be less. Secondly, if the operating profit is going lower, and it means that now the lower amount is going to spread over the highest amount of capital employed, so automatically your answer will be lower. So in these two conditions, the return on capital employed will be directly out. Understood, Hamna?
Yes.
Next, as you can see, that gross margin is 22%, and now this is 23.4%. So it is improved. First of all, let's write this is improved, and why it is improved. So basically, GP margin means that revenue gross profit multiplied by 100. So it means that your GP is increasing. Like your GP is the highest percent taking highest percentage of your revenue. So it may means that uh, maybe your sales has increased because maybe you are selling the goods on the higher price.
Okay.
And second thing would be that maybe your cost of sales has decreased. That is why your GP is increasing. So maybe we can say that maybe the cost of sale has decreased because maybe the business is getting the bulk discounts on purchases. So these two reasons could be behind that. Then we have the profit margin. It means that the profit is increasing. Or profit margin means that the percentage of the profit on your revenue, and it is increasing. So it is really clear that if it is increasing or decreasing, so it may mean that uh, if profit, let's see whether it is increasing or decreasing. Yeah, so as you can see that this is 11.5, this is 11.0. So it has that reward,
Yes.
and it may mean that maybe the expense has increased. That's why your profit is declining, or maybe other income, because we know that the other income is the part of the like other income we needs to add in the gross profit. So maybe the other income has decreased.
Or revenue has decreased. Can we say that?
Yeah, multiple reasons we can. Yeah, multiple reasons we can say cost of sales has decreased, GP has decreased, sales has sorry, cost of sales has increased, GP declined, sales declined. We can write anything here. Then we have the rate of inventory turnover. So as you can see, previously that was 9.46 times, and this is 11.45 times. So it is improved. Why it says that in 1 year we are purchasing and selling inventory 9.46 times, and then in 2025 we are selling and purchasing inventory 11.45 times. So it has improved. As you can see that they have changed the way they ask the questions.
Yeah. This is all theory.
Yeah. So improved. So it may mean that why we are selling inventory more quickly now. So it may mean that there is increased demand. Second reason could be that maybe you reduce the prices. Selling price has reduced. That's why selling price has reduced. That's why revenue increased, sales increased. Then we have the liquid asset test ratio. So as you can see that this is 1.42 into 1, then 0.95 into 1. So it has that reported. So why it is debt recorded? Of course, it means that your liability has increased and your assets has decreased.
Okay.
Do you know how we can find out this current assets minus closing inventory divided by current liabilities? So if your current liability has increased, so denominator will be big. So your current asset has to spread over the large number of current liability. Then your answer will be small. And if the current assets are decreasing, so it means that your small number has to spread on the higher number of current liabilities. Your numerator is small, so that is why your answer will be small as well.
Okay.
Then we have next question. They are saying that director at AY Limited were concerned that the trade receivable turnover rate had deteriorated and so increased the provision for operated from 2 to 3% for the year ended 31st March. The trade receivable balances were as follows. This is trade receivable for 2024. This is for 2025. Write up the provision for doubtful debt account in AY Limited ledger. Balance the amount at 1st April 2025. Okay, first of all, we need to find out the provision for this year. Means that 1st April 2024. So for the this trade receivable, as you can see, they are saying that previously it was 2%, then it has increased with the 3%. So it means that we need to multiply this with the 2%. So what is the answer for that?
Okay, one second. 6,920.
Yeah. So this is our opening balance. Okay, now we have to see, you need to multiply this with the 3%. So you will get the provision for doubtful debt for the year end. You need
11970.
to 1
970.
you need to, as you can see, it has increased. So you have
Yeah.
to see it with how much amount it has increased.
5050.
So since it has increased, provision has increased, that's why it will be carried. So provision will be credit, income statement will be debit because provision has increased. So we need to transfer this into the expense section.
Okay.
And the closing year means that this closing year the provision is 11970. So we will be writing here as closing balance. And this closing balance will shift here on 1st April 2025. C part is they are saying that explain why what is meant by provision for doubtful debt. So basically, this is an estimate of the amount which a business will lose in the financial year. Then they are saying that name the accounting principle being applied when creating a provision. Okay, so remember that there is a concept called prudence. This concept says that you should not record your income until it realized, and you should reduce. You should deduct the advance losses. It means that even if the expense or losses has not been incurred, but if you have a doubt, so you should reduce it in advance from your income statement. So with the help of like this is the accounting concept which like we are charging this provision for doubtful debt because of this accounting concept.
Okay.
So let me see the last question quickly. This is a manufacturing account. First of all, as you know that in the manufacturing account, we have to write the cost of raw material consumed. In the cost of raw material consumed, we usually write the opening inventory
I
uh,
think I can do
of
this
the.
manufacturing account myself.
No, actually, I'm just making a video on that. I need to upload in the on the
Okay,
YouTube
okay,
channel.
okay.
Yeah, that's why I'm just discussing everything.
Okay.
Okay, so as you can see, that these are the raw materials. This is the opening inventory because the first step has 24, and this is the closing inventory of raw material. This is the finished good inventories, and this is the work in progress inventories. Okay, first of all, we need to write the opening inventory in the cost of raw material consumed. After that, we have to find out the purchases of the raw material. So as you can see, the budget of the raw material is in front of us. This is what we need to add. After that, we will see if there is any purchase return of the raw material. So I can't see any purchase return. So that's why we will not write it. So we will directly write the closing inventory. So we will minus this. So it will be like this. We will add the purchase of raw material and we will deduct the closing inventory of raw material and then we will get the answer. After that, we have to write the like the direct wages or direct expenses. So do we have the direct wages? So as you can see that we have the salaries and wages. There are operative wages means that the workers who are operating the machinery. This is this, and the factory supervisor. We know that since they are not directly linked with the production, so that's why they are the part of indirect cost, and this is a part of direct cost. So it means that we will write it here plus operative wages. And then when we will add this total cost of raw material consumed and the operative wages, so we will get the prime cost because prime cost is equal to the total direct cost. Prime cost is equal to direct material plus direct labor plus direct expense. There is no direct expense, there's only two things here. So we will add and find the direct cost. After that, we have to write the factory overheads. So let's see. Okay, first of all, we have this one factory overheads. Factory supervisor salary, this is this. Let's see the adjustment first of all. They are saying that the depreciation of the machinery is to be provided at 50% using the reducing balance method. So as you can see that we have the factory machinery at cost and we have its depreciation as well. So we will deduct this from the cost. So we will get the net book value and we will apply this 15% on the net book value. So we will get the depreciation for this year. Then there's the rent and rate 60% relate to the factory. So as you can see, these are the rent and rates. We will multiply this with the 60% and we will transfer this into the manufacturing account. Then electricity charges are to split between 5 into 3 between factory and office. So 5 into 3 means 5, 8 and 3 over 8. These are the electricity charges. So you will multiply this with the 5 over 8. And
Okay.
then they are saying that insurance is split equally between the factory and office. So this is the insurance. You need to simply multiply this with the 50%, or you can multiply this with the 1 over 2. The rest of the things you will be writing as it is. Then they are saying that you need to prepare a trading section only for the company. Here we will write the revenue, then we will deduct the cost of sales. Here we will write the opening inventory of finished goods, purchases of the finished goods, cost of production, which we will find from the manufacturing account at the end. And then we have to deduct the closing inventory of finished good. And after that, we will get the gross profit. But as you can see that um, yeah, we have the revenue. Yeah, we have everything. Yeah, that's it. Let me send it to you on WhatsApp.
Okay.
Yeah, done. Should we end the class now, or maybe you want to ask anything?
I think I understand everything now.
Okay,
Okay, Miss Allah Hafiz.
and